Well, as volatile as the grain markets have been here over the past 3 weeks or so, today is kind of counter to that. There's not a lot going on. Let's take a look here at the corn market, and I'll show you what I'm talking about. On the quotes provided by bar chart, you have the May corn only 7 3/4 lower now at 748.5. Now, we had a fairly wide trading range, about 17 cents wide, but right now we're about 4 cents off of our low of the day. We have July down 4, but then you go out to December and we're a penny and a quarter higher. We're at 665 and a quarter out there. In the soybean market, we had big gains at one point, but those are all gone now. May soybeans are up just 3 cents at 16.94. It's about 26 cents off of our overnight high. November soybeans now 5.5 cents higher, and about a nickel under that $15 benchmark. Well, let's venture out into our wheat trade, where we had some really big gains early. We had the May Chicago wheat setting a high of 11.69 and a quarter in the early morning hours, and now we're at 11.07 and a quarter, and now we're down 12 cents. Go figure. We're about a nickel off of our low from a little bit ago. July Chicago wheat now down 5 1/4 cents, so everything reversing out. On the Kansas City market, you have the May contract trading 3 1/4 lower at 11.10. Well, that's 46 cents off of its overnight high. If you look at July, we're just a half cent higher. That doesn't give a very good clue as to the volatility or the ranges there. May spring wheat 3 3/4 higher at 10.92.5, and you have July now 2.5 higher. And you still have those far out deferred months anywhere from 10 to 20 higher, though, so kind of an oddity there. In the cotton market, you have July currently 70 points lower at 125.51, and December new crop down 71 points. 107.45 is the last trade there. Let's bring in Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. Question: did you get much moisture out of this system that's moving through?
Good morning, Marlon. We did. We got good rain yesterday. There's more rain in the forecast. The grass is really greening up, and it's going to really help out this winter wheat crop. So, yesterday we saw a big rally in wheat yesterday, and I thought, it's kind of strange to have such a strong rally when you're having rain across the hard red winter wheat belt. Some of the driest areas getting probably the best rains that they'll have seen for quite some time. And crop ratings that came out yesterday did reflect an improvement in Kansas for last week. They'll most likely improve again next week in the ratings. But, there's still low rated crops, but starting to improve a little bit in Kansas because of some of the moisture that's fallen. And next week we would look for a little bit of a rebound as well because of this good rain that's coming through as the crop is exiting dormancy. Now, April 5th, I think, is the date, or April 4th, that the USDA will start their weekly crop progress numbers and condition ratings. So that'll be the first official one from the USDA office.
The April options expiration comes up on Friday. Now, April is kind of one of those off months, when it comes to grain trade. But could that be having any kind of an impact here on the futures trade here this week as it seeks to find what kind of a strike price it wants to navigate to?
Yeah, it certainly could, because we don't have a tremendous amount of news. So something like that could be swaying the markets and giving us a little bit of direction. The markets want to tied to a strike price. We did have the export sale of soybeans this morning, but again, that's not a lot of fresh news. There was some news coming out. Ukraine is starting to ship some corn by rail. Well, that's not as effective as port shipping, maybe only 10 to 15% of capacity by rail, but it is moving some corn around in the country. So that was enough to pull our corn futures back. But again, we're staying inside a trading range, and these ranges seem to be intact at least through the weekend when those options expire that you mentioned. And then also you have the quarterly stocks acreage report out next week, and that could keep us within this trading range as well.
Okay, we'll take a look at our livestock trade in just a moment. Our guest is Brian Hoops. We'll be back right after this. Okay. Oh, hey, Brian, I think they're going to reestablish your connection. It's dropping out a little bit, they said on the video, so they'll call you right back.
Okay.
Well, now let's take a look at our livestock trade. First, we go to live cattle. On the big board right now, we have the cotton. That's because I didn't switch it. All right, let me get the live cattle pulled up here for you, then we'll talk about this a little bit. On the live cattle board, as I roll it over here, we have the April contract 27 higher at 140.32. The June and August are both 40 cents higher. Those are the biggest movers of the day at this point, and June is now at 136.72 there. The feeder cattle market today, well, kind of lackadaisical. We have the April contract 15 cents higher. We're at 161.35. And here, your biggest mover is the May. It's up 70 cents at 166.45. Now to the lean hogs, and right now you have the April down 75 cents at 99.87. It had been over $100 there for a while, and now it's just under it just a little bit, about 15 or 12 cents. May lean hogs down 80 cents. We're at 110.27. Let's bring back Brian Hoops of Midwest Market Solutions here. Brian, I didn't see anything on the wire about cash cattle trade yet today. Are you hearing any rumblings out there?
Yeah, unfortunately, we're not hearing much in the way of any cattle news yet. Futures trading in the 140 range. That's anticipating we're going to see cash trade at higher money this week, maybe a $2 gain. So far, we've not seen that be the case, but hopefully we do see a little bit of a bounce here with the show list being down about 4,000 head from last week. Problem we're going to run into is you have steer weights increasing last week. They're 19 pounds heavier than last year, and then Friday you have a cattle on feed reports. You may not trade any cash until report because estimates that I've seen look a little bit bearish. 1.5% more cattle on feed right now than at this time a year ago. Placement numbers may be 5 to 6% larger than last year at this time. So some negative numbers on Friday's report, and I think that's going to be a limiting factor in the cash markets this week.
All right, the April cattle chart there, you can tell that it had sold off quite a bit. Gained back part of what it had lost, and now it's kind of consolidating here about the last week or so. In that lean hog trade that we were talking about, we had such huge gains yesterday. Now we're giving back a little ground today. Are you looking for maybe a bit of a retracement, or do you have a target for the downside potential here?
Yeah, I think it's just going to be a small retracement in here. We've hit those month contract right near the 120 level. We're looking for a pullback off of that level. You could see a $2 or $3 correction in here, and then maybe some fund buying coming into this market once again. It looks like the technicals are stronger, and that's going to usher in a lot of spec buying, especially with the fund traders who won't be long.
And I did want to touch on what's going on with the Dow. I'll get you updated there. We're still 249 points higher on the June futures. We're at 34,685 right now. The dollar had been flat at the start of the day, and it doesn't get much flatter than that, only down 24 points right now at 98.475. That's on the June futures. On our energy markets, West Texas Intermediate crude, April kind of taking a beating now. We're down $2.24. So that puts us at 109.88 per barrel, and that would be, roughly about $5, a little more than that, off of our earlier high from last night. So that's the latest market activity. Thanks, Brian, for the help. Brian Hoops, Midwest Market Solutions. Janet, back to you.